Right, I think everybody's had a chance to settle down and sit down. Welcome to the AGM. I think it's our 102nd one now. No, 101st. Yeah, last year was the... Anyways, just a couple of announcements before we start. My name is Ian Griffiths. I'm the chairman here for a short while longer. There's no fire alarm test today, something that we've got to tell you. And if it goes off, then follow me. I'll be going that way. And could you please make sure that your phones aren't on? I've just been told to turn mine off, so. Right, so now that we've got past the usuals, welcome to the AGM. And I'd like to ask Gareth, as Secretary, to read the notice of the AGM.
Notice is hereby given that the annual general meeting of the Society will be held at the Swansea.com Stadium on Thursday, 25th of April, 2024.
Thank you, Gareth. There's only one apology I think we've got, and that's from Paula Catherine, who was one of our board members until last year, and she's had to hive off and do some real solicitor duties this morning, so she's not here. Minutes of the previous meeting. I think you've all had a copy of this as part of the material that was circulated earlier. I need to get approval for these, and would anybody like to propose that? Thank you, and I need a seconder. Thank you very much. I've now got, we're going through a slightly different format this year, and we're going to do the resolutions, the results of the voting early on, and we're going to do it straight off rather than actually pass it back and forth. The people from Civica have gone through, and we've got one of them attending today to make sure that we're not cheating in any way. But we've had a good result this year in terms of the number of votes, which is much bigger than usual, and that reflects itself in the cheque that we're able to provide at the end, which we'll get a presentation with as well. Receive the annual report and accounts. Daniel from Mazars will read that out for us now.
Thank you, Chair. Morning, members. In our opinion, the financial statements complied with the requirements of applicable requirements of Section 76 of the Building Societies Act of 1986 and the regulations made under it. Our key focus area was particularly on the provisions relating to loans and advances, and our work around the methods, the assumptions, the data that management used. We didn't find any concerns around that. Our testing was satisfactory, and yes, that's all. Thank you, Chair.
Thank you. Short and sweet. Thank you. The total votes for this, in terms of accepting the accounts, were 1,744, and the votes against were 15. I think that carries the. Aline and I talked about this one earlier on today, and we're not quite sure why people vote against accepting the accounts. Some of the other votes are a bit more sensible, but that one we're not too sure about. To reappoint Mazars as auditors to the Society, the total votes for were 1709, and the votes against were 36. So that's their Mazars are duly. You don't have to worry anymore. That's duly reappointed. To approve the director's remuneration report, Total votes for were 1651 and the votes against were 81. So the Director's Remuneration Report is duly approved. The other three now are re-elections or elections into the board. To elect Nathan Griffiths, a Finance Director. Total votes for were 1709 and the votes against were 43. So Nathan is duly re-elected. To re-elect John Union, total votes for were 1706 and the votes against were 42. So John Union is duly reappointed. And Lynn Pament as elected for the first time to the board. Total votes for were 1702 and the votes against were 46. That's actually the end of the formal part of the meeting. So we've gone through the official end part of that. So we can conclude on that the meeting is the AGM is at an end, and we can start talking to you about some of the more interesting things that have happened over this last year. Yeah. Right, so it's my turn first. And I'll read this out. I don't like reading things out, and especially I don't like reading and making things up as I go along. So it'll actually work out better, and it might make more sense if I read this out. This is the Society's 2023 annual report, and the 6th time I've been able to do this job, which is really good. The best results we've ever posted, and I've been able to say that for the last 6 years, and it's gradually got larger and more successful, and had a lot more members over that whole period. So that's I feel very lucky and very privileged, and that's a really good message for you guys. We've stuck closely to our core purpose of helping members, old and new, build better futures with our assistance, and that's part of our key message and our key purpose for the society. We work with more different organisations in our communities than ever before, and we've provided more financial support to them than ever before during this landmark year last year, which was our centenary. Market conditions during the year were unusual. I think that's fair to say. Global and domestic, there was a lot of economic volatility, political uncertainty, and a lot of inflationary pressures. A lot of cost of living challenges that we expected that we were going to have to meet and help a lot of our members with in terms of their repayments and just affordability. We emerged from, and this is me saying this now, not the society, we emerged from the destabilising impacts of Johnson and Truss into an environment in which the Bank of England raised interest rates several times to try and manage the impacts. Our response was to look after our customers, listen to their difficulties, and respond as quickly and flexibly as we could to rate changes made by the Bank of England. This actually saw a record number of new members join, as we came first in raising saver rates and last in raising those for borrowers. We've seen relatively little change in the number of members in arrears, which was something that we didn't expect. We thought that we might have more people in trouble. And we've seen relatively little change in the number of members in arrears with payment, and these remain still at low levels. And as far as we can see, that's not changing. On the mortgage side, the Bank of England raised its base rate to 5.25 at the end of December 23, and that's the highest level in 15 years. The previous 12 years had seen levels never previously encountered during the 330 years that the Bank of England had been in place. They've never been that low. So I think it was probably predictable that they were going to rise. The amount by which they were going to rise, and they did rise, was anybody's guess. But that seems to be, and when my son complains about this, or his mortgage, I tell him that my first mortgage was 15.9%, and he still doesn't believe me on that. Yeah. The housing market had to be impacted by this and the technical recession, though it seems now that the impact has both have been relatively modest. If household spending remains squeezed over a longer period and GDP growth remains sluggish, there could be a problem. However, house building has remained sluggish for years and our national population continues to increase. So competition and house prices probably won't vary too much. The society needs to monitor events closely and react in the best interests of its members, because you are the society. On the savings side, our savings products during the year were actually really quite competitive, and evidenced by achieving record growth for savings, and that's continued into this new year. We don't rely, and we still do not rely, on commercial funding or any government borrowings. And many of our competitors do that, and over the next years they're going to have to pay that money back. And that is something that we've avoided, and that's been a specific target for us all the way along, to live within our means within the society. It gives us more solidity. We'll monitor our saver needs and market changes during 2024 to keep an appropriate balance on our offerings and self-fund our growth. We are planning for more growth again next year. Come back to that one. The board, in its annual November meeting, the board endorsed the existing strategy, confirming we should continue to serve our customers and communities, providing flexible and tailored mortgage savings and products. That's why lots of people come to us, because we actually treat them as individuals and listen to their problems in terms of what they need help to do. We remain convinced that meeting individual circumstances is essential to help our customers, especially to achieve important life goals safely and securely. Specifically, and this is just reconfirming what we've been doing over the past years, that we want to focus on customer value over the longer term, accelerate our online transformation to make it easier for members to interact with us, continue controlled and sustainable growth. That gives us more resilience as we get larger with a bigger footprint, and our territory increases as well. That's important. That actually makes us more resilient. We've reaffirmed our priority for retaining personal face-to-face branch transactions and expanding digital services. That means that we don't have to change the strapline that we've got in terms of we open branches, not close them. And we need to work on the sustainable growth and with the online transformation in terms of meeting expectations of our new customers and the new generation customers that are coming along behind our current ones. We have to continue to factor in regulatory changes externally imposed by our regulators, the PRA and the FCA, although in most cases the work we do for our members and the way that we've managed how we work ourselves actually makes that easier than for lots of other building societies. The board itself, the board society is responsible not only for ensuring quality services, but also ensuring the society remains sustainable and financially to deliver long-term value for a member. We believe we do this best when we have a diverse group of directors, each with expertise in different aspects of our activities and contributing different perspectives. We are doing that, I think, and We look at the expertise of the directors that we have on an annual basis and look to see that that is actually providing us the input that we need. This year we've got a new member, I mentioned earlier on, and you just voted Lynn in, so she's now a full board member. We welcome Lynn to the board as a non-exec director from, well, it was actually January 24 that she took up her role, and now that's been approved. She's a chartered accountant and currently Controller and Auditor General for Jersey, as well as being chairman of the FRAB, the Treasury Committee that actually regulates the finance for the whole of the public sector. She has been a lead partner in PwC UK's government and public sector practice and senior partner in the Cardiff branch of PwC. I've known Lynn for 35 years now, and I think that she's going to be an outstanding contributor to the society in the next few years. The society's got strong customer focus culture. You only have to talk to the staff about that, and the returns that we get from the consultations that we do outside and the from people buying houses through us, and we get really outstanding responses there, higher than any other building society. The staff are really, they actually care about the people that they serve, and they go the extra mile. It's really very impressive. In the last year, we launched a £100,000 fund as part of our service into the community and contributions to other or charitable causes within the community. And in fact, in the end, I think that turned out to be 126,000 put back into the community, which we actually think is part of what we're here for as a mutual. So, conclusion, which you'll be pleased about. I've reached the end now. Another standout performance by the Society, and the PRA, our regulator, I think they still can't work out how we deliver the results we do. We get new teams from the PRA virtually every year or two because they have a lot of turnover in their staff, and the ones that we get come down to visit us are always quite surprised at the way things actually work, and it takes a while for them to understand quite how we deliver what we deliver. So that's the end for me now. Aline will take you through the details of our performance. You can ask him more about how it was actually delivered, and you can ask him lots of hard questions.
Thank you, Ian. Good afternoon, ladies and gentlemen. My name is Alan Williams. I'm Chief Executive of Swansea Building Society, a position I've held for the last 23 years. There were a couple of questions that were submitted in advance of the meeting, so perhaps I can just run through those questions, and my colleagues and I will answer them before we move on to some of the figures. So the first question has come in two parts, and the part one was, it is welcome to see the Society make progress towards a more gender-balanced team at board level. I would welcome comment on what plans and policies are in place to ensure the Society makes progress towards a board and management team that reflects the full diversity of the communities the Society serves, and what impact not doing so is predicted to have on future growth. So I'll stop on that part of the question without reading out the next bit, but I'd like to call on Catherine Griffiths, our Director of Risk and Compliance and HR, to answer that part of the question. Thank you.
Thank you, Alan. Good afternoon, everybody. So I've been with the Society for just over 7 years and have been a member of the board since September 2021. At the Society, we value people from all backgrounds and recognise the importance of diversity and inclusion. We are better equipped to put our members first if we have a diverse workforce and a board of talented people who are representative of the communities we serve. Diversity on boards continues to be a real and live issue, and there are always improvements that can be made. As the questioner says, we've made good progress in moving towards a more gender-balanced board, and I'm proud to be one of 3 women that now sit on the board of Society. We also have a good age range on the board, ranging from people in their 30s through to their 60s, and of course there are certain protected characteristics such as disability that are not always visible. Our regulators also recognise the importance of diversity and inclusion within the financial sector, and this year they published a consultation paper which sets out their recommendations on how we can work together with them to drive change. In particular, they recognise that greater diversity will support better governance and decision making within firms. We fully endorse this and recognise its importance to the Society's future growth aspirations. We await the results of this consultation. In terms of our commitment to increasing diversity, here are some of the steps that we have taken and continue to be committed to. Firstly, the Race at Work Charter. We are a signatory to this Business in the Community Charter. The Charter has 5 calls to action for leaders and organisations across all sectors, and amongst these are ensuring zero tolerance of harassment and bullying, and making equality in the workplace the responsibility of all leaders and managers. Secondly, we are a signatory to the Treasury's Women in Finance Charter. Organisations who have signed this charter have made a clear commitment to improve diversity and to support the progression of women into senior management positions. The charter requires us to have 1 member of the executive team who is responsible and accountable for gender diversity and inclusion, and this for us is our Chief Executive, Alan Williams. Also, we're required to set internal aspirations for gender diversity across the board of directors, executive and senior management team. Our initial target was to achieve a minimum of 30% representation of females in board and senior management positions by the end of 2023, and I'm pleased to say that we met this and will continue to review such measures going forward. The Nominations Committee is responsible for the appointment of new board members and have taken positive action to encourage applications from candidates from diverse backgrounds. The best candidates from the pool of applicants are shortlisted, and following interview, the best candidate for the role is selected. Positive discrimination is not permitted under UK law, but we are permitted to take positive action to encourage diverse applicants, which is what we've chosen to do. The last 2 non-executive director appointments have been female, both of whom were chosen based on their excellent skills and expertise for the role advertised. In conclusion then, the Society recognises this is an ongoing and constantly evolving issue and will continue to support a range of initiatives aimed at increasing the diversity of the board and the workforce as an ongoing commitment.
Thank you, Kath. The second question, I was pleased to read that the board has a green ambition strategy, albeit fairly limited in scope, and also has a green mortgage product focused on encouraging energy efficiency. I would welcome comment on what plans the Society has to offer mortgage products that incentivise other environmental metrics, e.g. water efficiency, nature friendly, etc., and whether the board will report at future AGMs in line with proposals from the Task Force on Nature-Related Financial Disclosure, Task Force on Climate-Related Financial Disclosures, and International Sustainability Standards Board. I'd like to call on Nathan Griffiths, our Finance Director, to answer that question. Thank you.
Thanks, Alan. So I'm Nathan Griffiths. I'm Finance Director at the Society and I lead our environmental strategy. Firstly, I think it's a great question, and I love that our members are engaged in our net zero strategy. So first starting point with this is that the Society recognises the important role we've got to play in helping the UK to reach a net zero greener economy by 2050. As a financer of housing stock, we've got a key role there to improve our housing stock across mainly Wales, but also in the UK. So just looking at the green strategy, we take it incredibly seriously. It's a standing item at every board meeting, and where it gets discussed in detail. In terms of the green mortgage products, so these were products we launched to help our members make their homes more energy efficient. They are based on EPCs, and that is industry standard. So at the moment, there's no plans to change that. However, it is an area that we will continue to innovate in. The other thing I would say is if a member did want to make their house more environmentally friendly, then it's definitely something we could look at under our lending policy. The other area, so the first area of the question discussed what are we doing about climate change. The second area is around the transparency in terms of what we're doing. So the member asked around the task force in relation to nature-related financial disclosures, and also the task force around climate-related financial disclosures. So the first thing to say is we aren't required legally to comply with these. However, if I just take them in turn, the nature-related disclosures is something that was released in Q4 last year, so it's something that we are currently monitoring and looking what good looks like. And that's not just us, that's as a building society sector. So it's definitely one that we are looking to look at in the future and have regard to. But that's lots of work to be done there. We appreciate that, but it's not just a Swansea Building Society thing. It's the whole building society movement. The second area is the task force on climate-related disclosures, and this is something that's been around for slightly longer. And as I said before, we don't have to comply with it, but we do have regard to it, and not necessarily in the summary financial statements, but if you look at our annual report and accounts, I think you'd be pleased to see this. There's an ESG section that's been significantly enhanced in 2023, and that covers the 4 key pillars of TCFD, TCFD. And they include governance, so that's how does the society manage its climate change related risks and opportunities. So as I mentioned before, it's a standing item at board, and that's disclosed in the accounts, and we pay as much detail as we do the financials. The second is around strategy, so we discuss our strategy. So we have a green strategy, but we also look at, okay, how environmental risk, climate change related risk, going to impact on our strategy going forward and the types of lending we do. The third relates to risk management. So we have the transitional risks of a move to a green economy, such as regulation we'll have to comply with, minimum EPC standards for houses, and how we get our housing stock to where they need to be. And the second area is physical risks. So what's the risk of flooding, subsidence, coastal erosion on our loan book? And we perform modelling on that using a third party annually, and the results are disclosed in our accounts. We also disclose what our EPCs of our mortgage book look like in our accounts as well. And then the final area is around the key metrics. We also disclose what the key metrics are. So as I said before, EPCs, what our carbon footprint is as well. That's also disclosed in there. And also our target of being carbon neutral, firstly for operations, which we've already achieved, but longer term, how we help the UK to meet the net zero target by 2050. So this year, I think you'd be pleased to know that there's been significant work done now on enhancing our disclosures, but we recognise this is an area we need to develop on and do more work on, and look forward to presenting more information on that in future annual report and accounts. Thanks.
Thank you, Nathan. Another 2 questions. I think these are for me. Right, excuse me. Okay, question 3. As a member of Pembrokeshire, I'd like to ask if you have any plans to expand your branch network. A number of banks have closed their branches in Pembrokeshire, leaving many towns without any branches. Does SBS plan to open a branch in Pembrokeshire? Barclays and Halifax are closing in Hwylffordd, Haverfordwest, and maybe this would be an excellent opportunity for the society to move in, offering a local building society to the people of Pembrokeshire, demonstrating the opening, not closing branches. So if I can answer that question first, I mean there are 22 local authority areas in Wales. and I can tell you that we get contacted by all 22 local authority areas in Wales asking us to open a Swansea Building Society branch. I think it's no secret that banks are closing branches probably in West and rural Wales faster than any other part of the UK, but we're only a small regional building society and there's only so much we can do. So in terms of what we're planning to do next, we've had an administration mortgage sales office operating in Abergavenny for the last 2 years, which has been really successful. Since we opened that administration office, the HSBC Bank has closed, Barclays have closed, and like the gentleman asked in the question, Halifax is closing in August. So at the moment, we've got a manager and assistant manager who are permanently based in Abergavenny, and I would say to you that when a suitable property presents itself, I think that's where we would be expanding next. So unfortunately, the answer to this gentleman's question is Pembrokeshire isn't next, but watch this space, it could be at some point in the future. I would also add that we've got a business development manager, Paula John, who's based in our Carmarthen branch, but covers Pembrokeshire. So Paula is always available to meet customers, independent financial advisors, mortgage brokers, and basically promote the Swansea Building Society products to those members based in Pembrokeshire. Okay, question number 4. Would SBS consider offering a lifetime ISA at the moment? I have had to open one with a society whose nearest branch to me is 250 miles away. I would much prefer to open an account to start saving for my first home with a local building society, and I think that offering this type of account would sit nicely along the society's first adult saver account. SBS would be the first Welsh society to offer this type of account and would therefore continue its history of helping young people buy their first home. Again, this is an interesting one because the government have actually designed this lifetime ISA product, and if I'm being completely honest, as with most things government driven, and this is why I stay out of politics, they've made it devilishly complicated. And when I say that, the devil is in the detail. The small print in these ISAs make them very difficult to administer. People get very cross when they don't comply with all the rules and regulations that the government have designed into the product. And it's partly the government and partly HMRC, so you can imagine you've got two really difficult people to deal with there. So to be honest with you, we've taken the view that if it's not a simple product that our staff can explain to somebody, it's not something that we should be promoting or selling. So at the moment, I'm afraid the answer to that one is we don't intend launching this product unless and until the government and HMRC review it and make it a straightforward product that any customer would readily understand. Okay, I haven't done my bit of the presentation. I'll stop there for a second. Does anybody want to ask any questions about anything our chairman has said earlier on, or the answers that my colleagues and I have just given to those first 4 questions? No? Okay. On that basis, I'll carry on. I will stop again at the end, and you will, I promise, have the opportunity to ask me anything you like, preferably about Swansea Building Society, but I'll do my best on anything else. Okay, so what can I say? 2023, as Ian said at the beginning, was our 100th year of trading. We put on a number of events during the year to promote the society, but the most important thing for us was community. And as Ian said, we donated £127,000 to charities and local good causes that were located in the same area that our branches and our customers are based. Although we didn't actually go out and promote mortgages and savings as much as we would have done, we just promoted the fact that it was our 100th anniversary. It clearly had a very positive impact on the business, and our total assets under management increased by 77 million to 607 million pounds. Needless to say, 607 million pounds is the highest level of assets under management we've ever recorded, and 77 million pounds of growth in 12 months is the highest level of growth we've ever recorded in 1 year. Our balance sheet is pretty much made up of two main things, our savings balances, and the savings balances come from people like you and I. As Ian said, we don't borrow money in the wholesale money markets. In fact, we lend money to the Bank of England, and that's because we carry very strong levels of surplus liquidity. So again, like the total assets, our savings balance has increased by £72 million, or 14.7%, and this created another record for the society. We maintain strong levels of liquidity, which you can see have averaged around 22.5–23% over the last 3 years, and that surplus liquidity is simply the difference between the savings that we take in from our customers and the money that we lend to our mortgage customers, and that's the balance that we hold on deposit with the Bank of England and a couple of the large UK banks. In terms of mortgages, as Ian said, interest rates hit a peak of 5.25% in 2023 in August, and we assumed that we'd have a really tough year selling mortgages at a much higher interest rate than the previous 15 years, where Bank of England base rate was at a 300+ year record low. That said, we managed to lend £67.5 million net, and we've now got a mortgage book of £478 million under management. I've also put the last 3 years' arrears figures there, and I think it would be fair to say the arrears figures have increased. But if you look at the growth in the mortgage balances, those arrears figures have probably grown in line. When I sat in the quarterly arrears meeting at the end of March, the arrears had already reduced to something like £84,000. So we're very close to our customers who are in arrears. They're on first name terms with our staff back at the head office in Swansea, and we're working with them as closely as we can to repair the arrears position and put them back on track. I'm hoping that interest rates will reduce in 2024. I don't think they're going to reduce as quickly as some of the money markets have predicted, and I don't think they're going to reduce by as much as some of the money markets have predicted, but I'm confident reduce they will, and I think 2025 in particular we'll see a big improvement, which should make it easier for people to A, afford mortgages, but B, to take out mortgages in the first place. In terms of profitability, we had an excellent year. The profits have increased by £878,000 between 2022 and 2023. I think what's more remarkable about this really is if you think 2021, 2022, we were heavily impacted by COVID, but as a building society, we were one of the few institutions that were given permission by the government to open for business, and we actually opened our branches longer than any other bank or building society in the towns and cities where we operate. And I think that paid dividends really with the support that we had from those communities in terms of opening savings accounts, increasing the balances on savings accounts, and taking out new or increased mortgages with the society. To run the society, we obviously need capital, and we've built up a very impressive level of capital over the last 3 years. It's very consistent, starting at 30 million in 2021 and didn't quite reach 40 million in 2023, albeit you'd be pleased to know that we're already way past that figure now. And these reserves are important because really it's the security that we need to run the business and the security that you need that we're running the business in an efficient and viable way. It's also important because we need to invest in our resources, and our main resources are our staff, our IT systems and our premises. And over the last 3 years we've invested quite a lot in all that, and the substantial investment that's due into IT in the next 7 years is eye-watering in terms of what it's going to cost. But because we've developed such a robust business model in terms of the profitability we're able to generate and the capital within the business, we can afford the very best technology that you, our customers, deserve. Just looking at the management expenses ratio, so this is basically a description we use in the building society sector to look at the administration costs of running the society. And as I said, we've invested a lot of money in people, premises and IT in that 3-year period. But if you look, there's been hardly any change to the management expenses ratio. And I'm hoping that as we grow the building society going forward, even though we need more people, more premises and more investment in IT, that we'll keep those management expenses in check. Okay, so that is the formal bit of the AGM done. I'll take questions from the floor now before handing over to Ian to finish off. So if anybody's got any questions, either of myself or any of my colleagues on the board on anything you've heard today or anything else, I'm more than happy to take them. Sir?
I've got a question on consumer duty. With the introduction of consumer duty, what changes does the building society have to make, and has it changed the way you operate?
Well, the good news for us is we haven't had to make many changes to the way we operate. So we're already duty compliant, but obviously we had to produce all the paperwork to demonstrate that. So this has been a really big project for us actually in 2023. But when we analysed our products, and it's a little bit like the LISA question I answered earlier on, we operate very simple products on both sides of the balance sheet. And the fact that they're very simple, they're very easy to explain, they're very easy to understand is a big help from a consumer duty point of view. We hold regular, what we call conduct meetings that look at the way Swansea Building Society does business. Every customer that opens a savings account or takes a mortgage out with the society gets a form to fill in to say, how was the experience? Did it work for you? Did it not work for you? Any complaints are reported to this meeting. And one of the non-executive directors attends every conduct meeting, which is also attended by every branch and department head in the whole of Swansea Building Society. And we look at all the feedback that every customer has given us in the responses to our questionnaires. So yes, there's been a lot of paperwork filling out. In reality, have we changed the way we do business or our products? Not really. Thank you. Sir?
In the last budget, the Chancellor changed the rules on cash ISAs quite significantly.
He did.
Do the Society intend to offer customers some of the things that you could do and other societies will be doing? One that sort of attracted me was you could have a mix of ISAs. Say half of it with an easy access ISA, and then the rest of it with one that's there for 12 months, for example.
Yeah.
And if other building societies in the country don't do that, would that not affect your competitiveness if you don't do it?
Well, first and foremost, the answer to your question is yes, we are offering that flexibility. Unfortunately, the biggest banks and the biggest building societies in the country are not. So you're going to get, I'm going to say about a third of the people like Swansea Building Society will allow customers to do exactly what you just said. But unfortunately, the very biggest players said they haven't had time to change their systems to allow for the Chancellor's...
yeah, but the biggest players also pay the poorest interest rates as well.
Thank God. Yes. Yeah. So yeah. From our point of view, you know, we try to be as competitive as possible. We want to be as flexible as possible. There are fewer rules and restrictions around what the Chancellor has proposed in his last budget relating to ISAs than there are at the moment around the current ISA regime. So I applaud what they're doing, and it does make it easier for a customer to have more than one ISA provider, and we're quite happy to compare our rates with anybody, but the bigger the bank, the better, as you say. Anybody else? No? Okay, I'll call on our chairman to say a few words. Thank you, Andy.
Thank you, Aline. Anyway, yes, my time working with the society is now at its end. It's been a long time. It's 9.5 years, and there's unfortunately, I'd like to stay longer, but unfortunately the PRA, who are regulators, say that you have the maximum of 9 years here. And it's been, I have to tell you, it's been a real privilege, and it's been a great 9 years from my perspective. A lot of it, and I'll mention him about 3 times in this, down to the man who's been talking to you just now. Aline as not only the longest serving chief executive of a building society, but I think when Aline started, I think it was really one of the smallest ones. And now we're halfway up that table. In fact, it's in the time I've been here, it's trebled in size. I mean, and it does that actually because it's actually good at what it does, and it cares about the customers that it serves. So, I mean, that's not a pitch. I mean, you're members here, and you either think that's right or not, but that's why it works so well. One thing that we've managed to do over that nine and a bit years is that everything that has been planned and controlled as we've gone through things. When I look at what some of the other building societies have done in terms of generating growth, a lot of that is not sustainable, and a lot of that is actually quite risky, and what we've done hasn't been. It's been gradual, it's been planned, and it's worked. And the benefit, I think, is with the customers, the people that actually own the society. And that's the way it should be. It's a mutual, and it's very proud of being mutual. I'd like to thank my colleagues, and not only the ones that are here, but there are, because I've been here so long, there have been a few that have come and retired out of it. It's the first time, I think, that we haven't had any of those at the AGM, which is, but don't worry, I'll be back next year. Colleagues, and not only do they cover a lot of what the society needs in terms of expertise, but I have to say that of all the boards that I've been on, they contribute unstintingly in terms of their time. I mean, some of the time that the guys spend on this is vastly bigger than is actually expected, or that I've seen in other building societies. It really works, and they care. I've enjoyed working. I've been at 7 different organisations since I left university. That's a lot less than my son is going to chalk up, I tell you. So 7 over 45, approaching 50 years. The last 9 years have been amongst the happiest and most positive that I've come across. And that's down to the society, the way it works, and the people that I've worked with. And it's not just the board members, but those who actually face the real front end of it, handle the customers, and handle the IT. I'm very sad to finish. My wife has got a lot of places that she wants to go to explore, so I'll be digging into the savings, so the stuff that I put aside with Aline will be gradually depleted. But finally, I'd like to thank, and there are a number of the management team who contributed, and that's where the powerhouse comes from. But Aline, I'd just like to say thank you again to. I think that there's only 2 major arguments I've had with Aline in 9.5 years, and we managed to settle both of those, and not many people knew about them. So that was, I think, the working relationship has been, from my experience of the other 7 organisations I've worked for, uncannily good. Board members and all the staff. There's a culture within the society that is unusually good. the staff really do care. It's reflected in the numbers, but in the other organisations I've worked with, they don't actually care quite as much. Even the hospitals I worked at. So that is really, and it underpins why the society works, but it also the regard with the communities it serves. Long may it continue. Thank you very much.
Ladies and gentlemen, I won't give you 2 minutes, I promise, but I would like to introduce you to Mr. Steve Maddock, who's the current Deputy Chair of Swansea Building Society and is taking over from Ian as Chairman, who'd just like to say a few words.
I promise I will be there. Thank you, Alan. As you've heard, Ian has been Chair for 6 years, and from memory, he was selected in November 2017. I think it's true to say that in that period since, there have been some significant changes, both within and out with the society. You know, within the society, since I think from memory, Ian, when you were selected, the total assets were 274 million. I think they're now near 630, aren't they? That's right. We've opened a standalone branch in Swansea, in Portland Street, during your tenure, and out with that, I suppose, you can think of COVID and all the changes that have come and we've had to learn to live with. And there have been many leadership changes elsewhere. Since, I'll say, November 2017, we've had 4 UK Prime Ministers. We've had 3 First Ministers here in Wales. I think we've had 2 in Scotland. And as we're at the Swansea.com stadium, or I still call it the Liberty, believe it or not, 9 managers or head coaches, including interim, in that period. I can see Nathan trying to think of that now. So compared with that changing environment, Ian really has been a beacon of stability and constancy. So Ian, on behalf of your colleagues on the board, on behalf of all the staff in Swansea Building Society, on behalf of all our fellow members, because we're all members here, I'd like to thank you for your commitment to the society, your chairmanship of the society, and I wish you and your wife a long, happy and healthy retirement. Ladies and gentlemen, Ian Griffiths.
Thank you, Steve. One last task for me. So when we sent our member voting packs out this year, we promised that we would donate £1 for every vote made by our members to Maggie's, the cancer charity in Swansea. I'm pleased to tell you that we had nearly 1,900 votes. So we've rounded that cheque up to £2,000, and I'd like to call Lucia out to accept the cheque for £2,000. Would you like to say a few words? Yeah. The mic's on.
Okay. Lovely, thank you. I just wanted to say a massive thank you to the Society. We've been a charity partner for 3 years now, and a lot of what has been discussed today is about community, and Maggie's is very much a community-driven cancer support here in Swansea, but we do support people right the way across South West Wales as well. We've got centres all over the country, and we're going to be building one in North Wales in the next year as well, and we have one in Cardiff. So at that point we'll have all of Wales covered, which is fantastic. However, what we do is completely free to anybody that needs to access our service, so we cannot do what we do without the support of organisations like the Society and individuals that access our services. So I just want to say a massive thank you. Thank you for the donation today, and we are really grateful for all the help of the team and working with everybody across the Society who knows Maggie's very well. And yes, enjoy the rest of your afternoon. Thank you.